Good morning. It is hump day. It is news day. It is the Bubba Show, and this is where we talk about the news of the week. So earlier in the week we did have some housing data, but as you all know, or if you don't know and you're new to the show, my stance on housing is it has bottomed and it's going to continue to stay static or start to move up a little bit. I don't think we'll see back to the housing prices we saw in 2007 here, but I think that housing is now solid and on solid ground. This week, a couple of things I do want to talk about before I get to the main, or what I think is the main news item of the week. On Thursday, tomorrow, you have the Philadelphia Fed. You've got leading economic indicators coming out this week and some other, bits and pieces of news. But I think that this week's main focus, and this could be, and I don't know what's going to turn the market, but this could be something. We have the FOMC, Federal Open Market Committee meeting, which is where we have the decision on interest rates. Well, of course, interest rates we know now are going to stay at zero. So that's a given. But what has happened, and interestingly what happened last month, was you had the FOMC minutes come out, and it showed some dissenting opinions, and the market took a little bit of exception to that and had a little bit of selling pressure. And then a week later, at the Humphrey Hawkins testimony, you had Ben Bernanke come out and saying, no, I'm reassuring you that we're getting better. And so, again, the market took off and started to rally again. I think what you want to take from this FOMC meeting is we really need to start to look at what the Fed governors are starting to say. I believe there's starting to be some dissenting opinions. I believe that the interest rate market is possibly starting to get away from the Fed, and they're going to have to come in and start to buy some treasury again with all this money printing that they're doing. But you can see that rates have started to slightly climb here, and they're going to have to either let them climb and adjust with, or change their stance. Now, in my personal opinion, I think that higher interest rates are better because what we are in now, and we have been in, is what we call a liquidity lock. As I said on last week's banking segment, Ben Bernanke's program is only helping out the very rich. It is not helping out the average American, the average business. So I think that some of the dissenters, which want interest rates to start to rise, or at least start to talk about it, are starting to bring some pressure down. And I think eventually they're going to win out because the overall market itself is not happy and is not getting participation from everybody here. The real participants here are only the strictly very wealthy that are really benefiting from this low interest environment and what's going on in the markets, because they're the only ones who can afford to really get in. You're getting into a situation here where we need to change, and maybe it's time, if the economy is truly getting stronger, as everybody would lead you to believe, then maybe it's time to take it out for a test drive and see if they can let these rates climb a little bit and create some funds for the average Joe. It's very important that we start to look at things like that, because eventually we're going to have to come out of this. Now, obviously, they've promised the lower interest rate environment for an extended period of time, and they're tying it to the jobs number. Now, the jobs number was a joke, okay? The jobs number was more of a fact of people leaving the workforce versus people becoming employed. And all you have to look at is in 2007, we had approximately 7 million unemployed. In 2013, we have 14 million unemployed. So how many new jobs are we really adding? So to me, this is a very key number, and really it's the number itself is not key, because I know they're not going to change rates this time, but the key is where do the Fed governors stand, and where is the hawks and the doves, and that's what we want to see from this number. Remember, the AJ call on Monday nights, been really awesome, options intensive. If you want to find out about it, Todd@AverageJoeOptions.com or Todd@Amesh.com. For Wednesday and Hump Day, have a great day. We'll talk to you on Thursday.